Hey, what's up guys, John here. Did you see what unfolded yesterday in Philadelphia? I'll show you this video. 1.2 million views, but it greatly highlights the direction in which America is going into right now.
Yeah, we will be on special events. I'll be checking in with them on the total.
Okay.
Look what they're carrying.
Okay.
Silver.
Received it. Music indicator. How do you mention?
500 people. 500 people. Now what's very, very concerning here is how well organized this is. This isn't going to end there. This is the beginning. This is going to be, they're going to start hanging flags, I would imagine, with these red flags all over cities.
Fight the rich, beat the poor! Fight the rich, beat the poor! Class war 2024!
You're going to start seeing a lot more people in power saying things that are in line with this. For example, Kamala Harris recently came out saying that she believes that everyone should end up in the same place.
If the goal is truly about equality, it has to be about a goal of saying everybody should end up in the same place. And since we didn't start in the same place, some folks might need more.
What does that really signal? It signals massive change in America. That's what it signals. And when you start to see, proposals and conversations about a universal rent control, a national rent control.
We're going to make sure that rents are kept at 5% increase.
Something that we all have to pay attention to. I've been issuing a warning about this rent control, growth coming, saying that we are going to witness a national rent control. The White House is getting ready to step in and limit the amount of rent a landlord can charge and potentially even go after them for price gouging. And this is going to change everything about real estate investing. In fact, I issued a warning 1 year ago about a nationwide rent control, and then another one 10 months ago. So saying, look, prepare for this. This is going to be coming. And then you have this big push. This came out, the revised version, which I'm going to get into. This came out a couple days ago, right? I'm going to break this down for you. I'm going to show you exactly what is happening and why I think we're walking into a massive change for real estate and a massive change for America. Please hit the like button. Hit the like button. YouTube will share this content to educate more people about what's going on in our economy. And if you'd like to fix your credit to position yourself for what I believe is going to be the greatest wealth transfer of all time, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item in your credit report, go to GreatCreditFast.com, click the link in the description just below this video, schedule a free call for tomorrow. Take a look at this. This is March 4th, efforts to expand access for free legal services for people facing eviction in Nashville. Then you have it in Nebraska. Senators adopt compromise on bill concerning tenant and landlord rights. But filibuster, led by Senator Salma, continues. She calls it the big government bill that will erode property owner rights. And essentially, if a landlord wants to evict a tenant, it won't show up on their report. So when the next landlord tries to, qualify a tenant, if they have a former eviction, they won't be able to take in that information. You have Georgia, a legislator poised to pass milestone tenant protection law. This is March. All this last few months. Then you have Dallas. This came out, let's see, July 2024. And this article, what they're doing here is it's such stories no longer surprise Melton. In addition to his lucrative corporate work, he is the founder and the head of a Dallas Eviction Advocacy Center, a nonprofit that has attracted national attention since its inception in 2020. In short order, he's become the go-to figure when tenants across the city are facing crisis and have nowhere else to turn. In Dallas and other parts of the state, such crises are never ending. This is not a Dallas problem. The Houston-based managing attorney of the eviction unit at Lone Star Legal Aid, the country's third largest pro bono firm. Now, when you listen to this guy, here was Mark Melton, one of Dallas's most decorated lawyers, stepping out of his milky white Cadillac Escalade as 24 code compliance officers swarmed one of his most crime-plagued cities, right? And so he, in the past, was, look, he steers billions of dollars worth of private equity deals each year. So you think about this. You have a major opportunity for these really powerful people to help these tenants. And in turn, they're going to really help themselves across a lot of people's properties, because mom and pop property owners own 70% of all residential rental units in America. So this major push towards making things better for tenants is really just making things better for the big guy. And this next year, 2 years, this is going to ramp up dramatically, I promise you. So you think about this this big shift. In 2021, 2022, the big story was we have a major problem, a huge housing shortage. Well, now apartments are sitting vacant for longer. There's a 50-year high in apartment construction hitting the market in the next 12 months. You have so much inventory in cities like Nashville, Atlanta, in Dallas, in Austin, in Phoenix, and a lot of these hot markets, and rents are already coming down. It's harder to find a tenant. So when you have this entire situation hitting landlords, not just from rents already starting to decrease and rentals stagnating, but also a lot more insurance and taxes that are coming, and on the back of that, more tenant protections, it's going to be a big problem for a lot of these real estate speculators that hopped in the market last few years, that are already levered to the gills. Fine renters is already starting to take massive strides on Google Trends. Now, how this whole thing is gonna go is we're gonna see this multi-family real estate bubble pop at the same time in which they want to protect tenants, right? So multifamily, commercial mortgage-backed security delinquencies to double in 2024. This is what they said in January. Well, look at this. This is May. The distress rate for U.S. multifamily doubled in just 1 month. So they made a prediction saying, no, it's going to double throughout 2024, and it doubled in just 1 month. Then, look at this. Apartments could be the next real estate business to struggle. $1 trillion plus wall of multifamily debt will mature by 2027. Is that ballooning concern? Now, it's actually quite fascinating here because if you think about it, real household wages are softening in America. And so when you think about it like this, real estate investors that bought deals the last 4 years, and they bought it on a 4% or a 5% return, and insurance and taxes are going up, they need to continue to increase their rents to justify owning the asset. That's if they can afford a refinance, many of which won't be able to. And so what's ultimately going to happen is as these tenant protections start to step in and they say, look, we need to put rent caps at 5%, if they do put rent caps in at 5%, and then on top of that, a lot of these deals go back to the bank, if the next buyer buys it at a much lower cost basis, they are going to be able to rent out that unit much more profitably at that lower basis than the former investor that bought that deal. So when you have all of these deals getting foreclosed on, I mean, look at this. For example, in San Francisco, one multifamily landlord is now defaulting on $1.8 billion on a major real estate portfolio. $1.8 billion in loans. Absolutely shocking. This, everyone knows, hides equity. This 31-year-old real estate investor nearly quadrupled his multifamily housing empire from California to Texas in just 3 years. This is 2022, right? Everybody was doing this. Everyone was buying as much as they could. They'd borrow as much as they could, and they'd invest heavily, thinking rents are going to go up 10, 15, 20% a year. Well, now Tides Equity, after aggressive collecting Metroplex apartment buildings in 2020 and 2021, the multifamily syndicators lost 2 properties to its lenders through foreclosure and is on the brink of losing 3 more. So you start to kind of really pay attention to this. Some of the 49 small banks heavily exposed to bad multifamily CRE loans may topple, but their size limits contagion. I mean, this is across the board. Look at this, for example. This person bought a condo more than a decade ago in San Francisco. They listed this place for $5.65 million in 2014. Then they dropped it to $5.6. Then they dropped it to $5.475 in 2015. Then they dropped it, they tried to rent it in 2023 for $18,000 a month, couldn't do that. Then they dropped it to $4,250,000, then $15,000 a month, still couldn't get it. Then they dropped it to $3.5 million. So they took a $2 million price reduction on a $5.5 million deal. The place will probably, maybe it'll trade in the mid twos, right? Maybe it trades somewhere in that range. Real estate is getting absolutely obliterated right now, and a lot of landlords, I don't think, are ready for this. I mean, look at this. These are closed sales nationwide. Across the board, it's almost double digits. Across every major market. Miami down 16.9%. There's a lot of distress right now. I'm under contract to buy a property and I'm buying it directly from Fannie Mae, and the comps in the neighborhood are more than 2.5x what I'm paying for it right now. This person bought it at the peak of the market. They way overpaid for it. They lost it in foreclosure, and I'm buying it. And so there's a lot of opportunity like that where you're going to be able to buy deals directly from the bank, directly from these lenders. People are in trouble. And I think a lot of opportunities are going to be found in these 2 to 4 unit properties, mainly because this is a residential deal. It's a residential purchase. You could get a 30-year fixed rate loan on these properties. And a lot of these deals you can buy with 5% down with some of these new loan programs. But the key is buying it at the right cost basis. You definitely don't want to go out there buying everyday deals on the MLS that, it's nothing special. It's just an average property. You don't want to do that. We're walking into some significant downside risk, and you need to invest accordingly. If you invest very, very well, you're going to be able to have a lot more options. If you buy for way more than you should, and we get hit with hard times, insurance and taxes go up, these crazy, crazy new protections come in, you have nowhere to pivot. There's nowhere to move. But if you're buying deals for 30, 35 cents on the dollar, you're probably better off sitting on that than you would be sitting in the US dollar itself. Because the US dollar, who knows what that's going to be the next 5 years. So here's what this looks like. Nonetheless, President Biden, along with Vice President Kamala Harris, recently proposed a nationwide rent cap, which would limit rent increases by certain landlords at no more than 5% a year. Many observers doubtless, had a similar reaction to Jason Furman, a former top economic advisor to President Barack Obama, who said rent control has been about as disgraced as an economic policy as a toolkit. The rent control plan is by far the most extreme administration's policies towards landlords, but it is part of a long-term trend. There's no doubt about this. They're talking about eliminating junk fees, which is basically checking the tenant's credit report. They want the tenant to be able to provide their own credit report. How would you feel if you were a landlord and the tenant comes to you and says, "Here's my credit report"? You've seen what many tenants have done with, fake income statements showing fake pay stubs. With a credit report, you could easily modify, turn a 500 credit score into an 800 credit score. The Consumer Financial Protection Bureau issued an advisory opinion threatening companies that perform background checks for landlords and offer, stating that improper matches could subject them to discrimination lawsuits. They're even talking about allowing for, look at this, the Federal Housing Finance Agency, the regulator for the government-owned mortgage giant Fannie Mae and Freddie Mac, said they wanted to limit egregious rent increases. And they're talking about allowing tenants to essentially organize, the right to organize, to where a tenant could go on strike. Imagine if you have a 10-unit apartment building or a 5-unit apartment building, and maybe you and that tenant don't get along in that 5-unit building. And maybe that tenant starts bad-mouthing you to other tenants, or maybe they just all can't afford it, or maybe they just don't want to pay, whatever the case may be. They decide to organize. If they do, the landlord is on the hook for the entire mortgage, the utilities, the insurance, the taxes, everything, right? This is the direction where America is headed. Someone would argue that we're already here. When you're seeing stuff like this throughout Philadelphia, this isn't by chance. This is the new America. Let's have a conversation about this below. What do you think about this entire situation? And if you'd like to fix your credit to position yourself what I believe is going to be a once-in-a-lifetime opportunity to invest in real estate, we'd love to help you. Now, I want to be very, very, very clear. If you invest in real estate, you have to understand what is happening, where this is all going. I think there's going to be opportunity in Section 8. I think there's going to be opportunity in certain parts of real estate, but I think there's going to be so many places to lose a ton of money. And if you're not doing your research and you're not investing accordingly, I think it's going to end not the way in which you originally intended. So really be strategic about what you do, because everything is changing. But if you would like to invest in real estate, I'm definitely going to be investing in real estate strategically. We'd love to help you if you have any credit issues. Late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, any issue at all like that. On your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Catch you next video.